So what is EY's outlook, IPO outlook for this year? Break it down. How's it look in the first half first?
Okay, first of all, the first month, January, seems to be quite strong or reasonable. But on February, it starts to be very slow down. And there are a lot of reasons. One is because of the interest rate cycle. That is have a trend to have U.S. Interest rate to be increased in this year. And then the other factor surely is because of the COVID-19 Omicron pandemic, which affect a lot of countries. In general, I think that the first half may be also affected by some other Chinese policy. They would like to regulate various industry, and that also hinder some of the IPO interest. And the tension between U.S. and China is another reason. But we still think that in the second half of the year, we are more positive because the relationship between various countries need to be realistic, and with the high inflation rate and also with other factors that may affect people to come together and talk, and in particular hope that some political or military actions will soon stop. And so that's why we are still positive, thinking that a lot of companies need to come to Asia-Pac for listing.
Ringo, in terms of the names that you are watching, Chime is one of them. With fintech stocks down so sharply, around 40%, is it a no-brainer that Chime is going to delay its IPO?
I think a lot of companies may need to have a delay of the IPO, but in general, with various pressure from the PE and VC, and also with the market will have up and downs. And so that's why I think it is just a short delay. Of course, if there are a lot of regulatory matters, they need to sort out, in particular for the fintech, and how to protect the domestic banks, and also how to make sure that the regulators do not worry about the significant volatility of the shares. That will be one of the key reasons to affect the timing for their IPO, and also whether they are successful or not.